10-year note yields end the week moving higher back above the 430 mark and rallying 20 basis points on the week. It's been a busy month for yields. Actually, it's only been a busy 3 weeks, as at the end of February, we were trading at 434, only to see yields go all the way down to 403 and then back up north of 430 in that time. So a lot going on. This last week was really about inflation and supply, and seeing a rally of 20 basis points can kind of tell you what side we ended up on: higher inflation and mediocre received supply. So ultimately, we see yields rallying ahead of next week's key FOMC meeting next Wednesday. Again, yields back above 430, ending the week higher by over 20 basis points. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And you may be surprised to notice that even though yields have been rallying this week, we did see moments where volatility was higher, but ultimately week over week it settled lower. So higher yields, lower vols. Not really what we're used to seeing, especially with a big event coming up next week in that March FOMC. Now let's talk about next week. That is really going to be the key March FOMC. We do get other data points. We get a 20-year auction and a 10-year tips note auction. However, it's really all about the Fed. They're not expected to change rates, but it's ultimately about their messaging. What will they say about how things are going to be moving forward, given these recent higher inflation data points, given some of the weaker economic points we've seen, including retail sales? So a lot for the Fed to discuss and go through and then articulate as to how they plan to move forward. As of right now, the market is pricing in about 65% chance that the Fed cuts rates at the June meeting, but it'll be interesting to see where that stands after next Wednesday. So after a busy 3 weeks, seeing yields rally, move lower, and then rally back again, we see yields closing out the week at 430, up over 20 basis points, the biggest weekly move since going back to October.